Top 10 stocks to buy in 2022. If you're wondering which stocks you should place bets on, then this video will give you some great insights about top 10 stocks that will give you huge profits or handsome returns in 2022. Watch the video till the end to get the detailed knowledge. So let's get right to it. Before we dive deeper into which stocks you should be buying in 2022, let's discuss some factors on which your selection of stocks will depend. Choosing the best stocks to buy today heavily depends on your personal financial situation. You have to decide how much you will invest in stocks. First, let's talk about the money you shouldn't invest in stocks. The stock market is no place for money that you might need within the next 5 years at a minimum. So what are the fastest growing stocks to invest in for the current year? Number 1. Walt Disney. If there was ever a company that has proven its ability to adapt in a hurry, it would be Walt Disney. The pandemic easily could have been Disney's undoing. Its theme parks were closed or had limited capacity for months. Its movie business was dead on arrival. Disney Plus was an instant hit and absolutely crushed expectations, sending Disney's shares sharply higher in 2020. However, DIS shares came back down to earth in 2021 and are off about 31% from their 52-week high. Disney Plus is still emerging as the strongest competitor to Netflix and boasts a truly unrivaled catalog of content it's assembled over the decades. Disney's movie business is back, as evidenced by the flurry of Marvel superhero movies planned and the theme parks. Did you really think they'd stay down long? At today's prices, the communication stock trades at a slight discount to where it did immediately before the pandemic struck. But Disney's empire has only grown since then. That and a share price lull in recent months has DIS poised to be one of the best stocks to buy for 2022. Number 2. Pinterest. Pinterest is an oasis of positivity in a social media landscape that's grown increasingly depressing and divisive. That partially flows from what Pinterest is about: ideas. People go to Pinterest to focus on things, not on other people, whether it's building a dream deck, baking a kid's birthday cake, or updating your wardrobe. Pinterest gives people visual inspiration for things they want to get done. The knock against Pinterest, despite its solid community and sales growth, has been a lack of Facebook-level monetization. This is especially true internationally, which accounts for 80% of its user base. But that's what I love about Pinterest. It's got the platform and the audience, and it's really easy to envision how seamless advertising, lead generation, and product placement could be when people are already there for suggestions. Number 3. Alibaba Group. A Chinese crackdown on big tech companies has weighed on shares of this e-commerce giant. China slapped a record $2.75 billion fine on the Alibaba Group after an anti-monopoly probe last spring. All told, shares lost more than 60% between their October 2020 peak and the end of 2021. Some analysts, even bullish ones, have trimmed sales and earnings expectations given sluggish economic and e-commerce conditions in China. Alibaba is the leading e-commerce company in China. Growth going forward might be less robust, but shares are cheap and trade at 11.6 times earnings estimates for 2022, a 54% discount to its 5-term average forward price earnings ratio of 25.1. Number 4. Netflix. On the surface, Netflix is an entertainment and production company which has become synonymous with households across the globe. Beneath the surface, however, Netflix is credited with turning the antiquated equation of physical media into the streaming empire we know today. With somewhere in the neighborhood of 222 million subscribers, Netflix has enjoyed enormous success in its 25 years of operation. Towards the end of January, Netflix reported its earnings for the last quarter of 2021. During the earnings call, management forecasted the addition of 2.5 million subscribers in the first quarter of 2022, about 4.5 million less investors expected. Netflix looks like one of the best stocks to buy now. Number 5. PayPal Holdings. PayPal is a multinational financial technology company that grants merchants and customers access to a digital payments platform on a global scale. In its simplest form, PayPal serves as an electronic alternative to traditional cash transactions. PayPal has amassed more than 325 million active account holders across 200 different markets around the globe. There's no doubt about it, PayPal looks like a cheap stock at the moment. However, upon closer look, the discount appears to be a miscalculation made by Wall Street. If for nothing else, the headwinds pulling share prices down appear to be micro in nature, and the long-term thesis remains intact. Investors with long-term investment horizons should see today's price weakness as an opportunity to add one of today's best stocks to buy. Number 6. Etsy. Etsy was growing nicely before the pandemic by connecting crafty makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. During the pandemic, all e-commerce was given a huge boost, but Etsy absolutely skyrocketed, growing at more than twice the rate of overall e-commerce. It certainly helped that Etsy was a natural fit when people wanted unique face masks, but its growth has been impressive across all product categories. As you may notice throughout this list, powerful platforms get my attention. Make no mistake, Etsy is one. Few e-commerce companies go head-to-head with Amazon and survive. Etsy not only did that when Amazon rolled out its own handmade items platform, it won. Because of its platform and brand strength, Etsy's market opportunity is in the hundreds of billions of dollars, and it's just started to scratch the surface. Number 7. Teledoc Health. Already a growing force, telehealth got a big boost during the coronavirus pandemic. After all, the barrier to a remote doctor's visit is much higher than buying your first roll of toilet paper on Amazon. Teledoc is a leader in digital health. Its merger with chronic condition specialist Livongo signals its intention to expand deep into the medical ecosystem. The company has done a great job of innovating and creating sustainable growth, and the industry is still in its relative infancy. Number 8. Amazon. Amazon doesn't really need much of an elevator pitch for most people. The company has a dominant lead in the US e-commerce market, and its Amazon Web Services cloud platform is also a market leader. However, more growth potential exists than you might think. We're a long way from maximizing e-commerce adoption. It still accounts for less than 15% of all US retail sales. The cloud industry is relatively young as well. Plus, Amazon has a ton of potential in other areas, such as healthcare, grocery stores, neighborhood markets, and more. Number 9. Block. Block, formerly known as Square, has evolved from a niche payment processing hardware company to a massive financial ecosystem for merchants and individuals. On the merchant side, Block has about $160 billion in annualized payment volume flowing through its system, along with a suite of adjacent services for businesses. On the individual side, Block has a cash app with tens of millions of active users and capabilities that include person-to-person money transfers, direct deposits, and debit cards, the ability to buy and sell stocks and Bitcoin, and much more. Block also recently acquired music app Tidal, as well as the after-pay by now, pay later platform. As its ecosystem evolves, the business will only get stronger. Number 10. Uber Technologies. The Uber Technologies ride-sharing platform operates in 63 countries and 750 markets, connecting riders with drivers. Uber Eats triangulates customers, restaurants, and drivers. The company also has an emerging freight business. Uber reached an important milestone in the third quarter of 2021, turning a profit for the first time. Even though earnings per share remain likely to be negative in 2022, both are analysts citing the company's improved financial position and increasing supply of drivers and market share gains put a buy rating on the stock. Also, the stock could trade at $55 over the next 12 months, a 72% gain from current prices. That very likely would be enough to put it among 2022's best stocks. So that's all for today. We would like to mention that this is not a channel intended specifically to provide financial advice, and we don't ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorstep. With that in mind, before you invest in anything, we recommend you do thorough research on the topic. We hope you liked this video. Let us know your comments below, and make sure to subscribe and give us the thumbs up. And we'll see you next time at the EdPreneur.